Good evening, folks. Today is March 23rd, 2021, and the time is 7:17 p.m. And today I'm going to talk to you about the positions that we currently have and some market updates and a new position that I've added. So this video is going to really be about the new position. So before I get into that, obviously I haven't been making videos for a while, and that's because I've started taking on a new role as a stock analyst, which I'm super happy about, but it's taken time away from making these YouTube videos. I'm gonna aim to make more throughout the next couple of days, just to give you an update of my process. So I'm going to give you an update on the current positions that we have and the new position that I've added. If you have any questions, again, feel free to email me at aistockalerts@gmail.com. And let's start off with our positions over here. So UWMC, we added a couple positions throughout the last couple weeks. So on March 5th, we added a position averaging down. So our lowest position that we added was at $7.28. So we added 360 shares at that. When we started off this position with UWMC, we bought 300 shares at $10.13. So this is why it's so important to dollar cost average. Make sure you have enough money to average down if you are bullish on this stock, which I am. So UWMC, we have about 880 shares total, and we are down about 5.24%, so about $400. Yeah, so we added 300 shares in the beginning. We averaged down at $9.90. We added 220 shares there, and then we added 360 more shares at $7.28. That brings my average cost per share to $8.91. So currently down on that, unfortunately, but listen, swing trading doesn't take a couple days or a couple weeks. Sometimes it can be months to see the profits that we want. Okay, so another one is Wolf, WOOF. We mentioned Wolf just over a month ago, and we first bought it at $27.17. We put in our first position at 180 shares, and then we averaged down at 360 shares at $25.69. And then another 360 shares on a dip. I believe it was March 5th, because March 5th we had a big down day. That was $19.93, so $19.93. And currently we are down 7%, so about $1,500 on Wolf. Still not too worried about that. So one thing I want to talk to you about is volatility in the markets and how you can protect yourself during market crashes. So over here, this is called UVXY. This is the ticker. This is an ETF off the VIX. And what the VIX is a derivative. It's a tool, a financial tool to measure and gauge the volatility in the markets. So if you remember last year during March when the pandemic just hit, we had a huge spike in volatility on the VIX, on the VIX, which is UVXY as the ticker. So I'm going to show you the chart over here and show you why it's so important to have this kind of fund in your portfolio, just to protect you in case there is a crash, or if you feel there is a crash coming. This is a great way to hedge your investments. So UVXY over here was trading on February 2020. Was trading at about $10.55, and during that big market crash that we experienced, it went all the way up to a high of $120. So you can see in a matter of a couple weeks, it went up a lot. So this is definitely a really good way to hedge your investments. It's something a more advanced trader should get into if you're going to be swing trading this often. But this is definitely something to look into, and definitely something you want to be able to take advantage of during market crashes. So think of this as an insurance for stocks. During a market crash, this is something you want to have. I've started my portfolio out with 1,000 shares, so we're going to be adding more as it dips down or goes up. So I'm going to gauge to see how the market's performing, and if I do see any bearish signs, I will be adding more into the UVXY. Again, this goes up during market crashes. So this goes up during corrections or crashes. As you can see here in the charts, this is a 1-year chart. So this is a 2-year chart. So if I go on the 3-month, for example, we can see big spikes. They might not look big. Oh, sorry. Let's see here. It might not look big, but for example, in January it was trading around $10, and then in end of January it was trading at close to $15. So 50% increase. So there's definitely a lot of spikes that happen. This is definitely something that goes up a lot, but again, it's all tied to the stock market itself. So this is kind of measuring the stock market as a whole. It's definitely a great way to hedge your investments, but it can be tricky. If you do have any questions on what UVXY does, or the VIXY, or volatility and how they work, you can email me. I'm always happy to discuss. Again, my email is going to be on the description, and it's aistockalerts@gmail.com. So yeah, if you have any questions, feel free to reach in the comments or the email. And thank you so much for watching.